Hey, this is Neil Bawa, the mad scientist in multifamily, and you're listening to the Mailbox Money Show with Bronson Hill.
So if you're like me, you're looking for alternative asset deal flow. One of the most challenging things I've found in working in alternative assets or things beyond traditional Wall Street investments is finding great deals. My guest and friend Jack Krupey is here with me today. He's the CEO of JKAM Investments, alternative assets. He has over 20 years of basically off-market deal experience. He's bought over $3 billion in distressed mortgages and done a ton of different stuff in the alternative asset space. So I love talking about everything non-traditional that's not stocks or bonds. I tell people I'm a recovering investment advisor, and I feel like I'm still recovering, even though it's been years. But I love talking about stuff that's real assets and stuff that is really non-traditional that people don't normally think of. So, Jack, how are you today? Welcome.
I'm doing great. Thank you so much for having me.
Great. Well, I tell we have the same barber there as well. So I know you're an awesome guy.
Absolutely.
So great to connect. Tell us about a little bit about your last straw moment and your story and how you got started. I know there's something significant that happened to you that kind of led you onto this, but why don't you take us through that journey?
Sure. So I actually originally thought I was going to go into the computer IT industry. It was late '90s. I was fascinated with the internet and Prodigy and AOL, and had a degree in information technology, but I happened to graduate during the dot-com crisis. So fortunately, I had a job, but it wasn't really as exciting as I thought it would be. I thought I'd be in New York or Silicon Valley, and I was still up in Rochester where I'd graduated college, and just had a job at a local consulting firm. So I went to Vegas with a friend, and I had already read Rich Dad Poor Dad, and I saw the glitz and the glamour and the money in Vegas. And as I was just thinking to myself, the path I'm on right now, I didn't really see a path to make a lot of money. So I bought one of those books at Hudson News, How to Make $1 Million in Real Estate and No Money Down, and read it cover to cover, and all of those creative financing strategies and how to get into properties with little money down. It really spoke to me. And when I got back to Rochester, I called my landlord, who was a local real estate broker, owned a bunch of multifamily properties, and he was renting to college kids. And this is 2002, so 30 days later, I had a house, almost no money down. Another 2 months later, I had another one. Early 2000s, if you could fog a mirror, you could get a mortgage. So even a 22-year-old kid was able to get some loans. So within a year, I quit my job, got my broker's license, did wholesaling, did fix and flip, amassed a number of properties, and had a great initial run until everything froze in 2008. So it was second crash. Less than 10 years into my career, I went through two crashes already.
Wow. And, it's interesting you say. I want to pause real quick because a lot of times, it's funny. I live in Los Angeles, and years ago, this is like 10 or 15 years ago, I met a guy who was the landlord for a house that we rented, and he's this guy who went to a seminar and was like, buy real estate. And the guy's like, hey, if 10% of this stuff is true about real estate, then I'm going to do really well. So he ended up buying houses all over LA. He has 20 or 30 houses, and he's done very well. Because obviously the things have come up. And so you started doing it, and you did kind of everything, right? You were doing wholesaling, you're doing flipping, you're doing all kinds, and one thing kind of leads to the other. And then, so you had some stuff you were working on, and all of a sudden 2008 happens. And like a lot of people, you got in trouble. So did you pivot from that, or what did you do from there?
Yeah, so fortunately, Rochester didn't crash as hard as the rest of the world. The property values didn't really go up as much, but the financing markets completely froze. So, I could have made a go of it up there, but it was just really difficult to get financing. I was still kind of young and undercapitalized. So all of a sudden you got to put 30 or 40% down to get into a property where it used to be zero money down, and I didn't have the money. So I ended up, I took a couple hits on a few properties. A lot of them I was able to give to my business partners, or, just sell at a break even because they didn't really go down or up. But I moved to New York City, and I grew up in New Jersey. So I'd always wanted to live in New York City. And, once things froze, it was like, I have no reason I'm not going to stay in Rochester the rest of my life. And it turned out that there was private equity funds and hedge funds buying mortgages, and they needed real estate people. They needed hustlers that had done short sales, had bought at the courthouse steps, had flipped properties. They needed us to represent the banks to make sure to figure out what they had, because they were just buying portfolios and figuring it out later. So I was on Wall Street in December 2008, and started what became a crazy 10-year run. I worked at a firm for about a year and a half. And then I left, and I started brokering and sort of just bird dogging for a few of the clients that were buying mortgages from that company and a few others. Then I linked up with a small family office, that backed me with a few $1 million just to buy portfolios. And so we would buy non-performing mortgages. And if we had to foreclose, we would, but we actually made more money by modifying the loan because we'd already bought it cheap from the bank. So we would modify the loan in many cases. We would either lower the principal balance or just re-amortize it over 30 years and lower their payment. And once they paid us for a year, we could often sell the loan to another bank and flip the paper without actually ever having to take possession of the house, and created some amazing win-win situations. I remember there was a military veteran who had a house in Maryland that was severely underwater. He had a $490,000 mortgage, and the house, when we bought the mortgage, was only worth $270,000.
Wow.
And so we paid $170,000 for that loan. And it turns out the house was probably already worth like $350,000. It was just, we had a low broker's price opinion and we're able to get a really good deal from that seller. Yeah. Right. And within a year and a half, we made a deal with him to do a refinance. He got his credit score back up, and we reduced his balance by $150,000. So he paid us off roughly $350,000. We paid $170,000 for the loan, and he paid us every month the whole time. It was just it was just like a financial transaction for us. We flipped the paper. He saved over $100,000. We made over $100,000. So it was a really cool business. I just say that because a lot of people think it was this vulture business, but in many cases we helped people and did better than the banks would have done for them.
Yeah, it's interesting, and that's a really good, like the note investor. A lot of people don't understand really how that works, and you did a great job explaining that as people get into a situation where maybe they stop paying or there's some issue happens, and all of a sudden if you're late on one payment or two payments, all of a sudden the quality of that loan from a financial perspective is far less. And so they're looking at it like it's distressed or people stop paying. So if they just want to get paid something out of it. So they'll sell it to someone like you as an investor to come in and do this. And then it can be something that actually you can help an individual like that, where they can actually keep the house, they end up making money, you both end up making money, and it ends up working really well. Was that you were doing that kind of on your own, or was that more with a larger firm you were working with to do that, Jack?
Yeah. So I started on my own, and then I was partnered with a small family office that we partnered together, and I was basically managing money for them. And then in 2014, I took a meeting at a hotel in New York City, didn't really think anything of it because I'd often taken meetings with people that were just local that maybe wanted to buy one or two loans. And it turned out it was a group of ex-Bear Stearns people that were reforming a private equity fund. They had run an in-house division at Bear Stearns, and when Bear Stearns collapsed, they had to regroup, and they wanted to get back into the mortgage business. They had been more on the credit card debt side. And it was, we were the right size. We were still small enough that we could partner with them, and there wasn't a lot of red tape. And what started as a $5 million science experiment to buy some loans together turned into 10, turned into 100. And between 2014 and 2019, we'd acquired $3 billion worth of loans.
Amazing. It's amazing to me, people that you find a strategy that works and you double down on it. You're able to find, hey, this is something that's unique in the marketplace. We've done it with oil and gas, ATM machines, car washes, even our multifamily, and not every asset it's the right time to do it. I have a friend who's 85 years old, super high net worth, hundreds of millions of dollars. And he's just said, there's been like several times in his life, at least in real estate, where there's been kind of this harvest time where there's like giving land away. There's just a really unique. And I think for a lot of people, 2008 was really hard, but for others that, the flip side of crisis is opportunity, right? And so we see that, and you're able to do that. So talk to us a little bit about, real estate as an alternative asset. A lot of people, are confused about what real estate is or where it fits in or what sort of allocation, people should consider having. I'd love to hear your thoughts on that.
Yeah, and I'm taking this quote from a gentleman named Stewart I know, but say he'll claim real estate's not an alternative asset; it's the original asset.
Yeah,
and
right.
And so and as you mentioned, you were a former financial advisor, and I kind of take exception when they lump in real estate with all the other alternatives. I think most people, especially the accredited investor that's like the 1 to 20 million net worth, many are just don't have nearly enough real estate and or other alternative assets. It's really it's surprising to me, and I think some of it's just the lack of motivation of the financial advisors to recommend, because often they can't get paid on it. If money comes out of Merrill Lynch or Morgan Stanley and goes into a real estate syndication, that's a loss of assets under management for most advisors. So it makes some sense. For me, I've always been, I got started in real estate right away. I've dabbled on and off in the stock market here and there, never had never had any great success. So just real estate just makes sense to me. And especially, during the last few years of my career in New York, you mentioned the last straw moment. What ended up happening with me is I lost control of my time. I got into real estate for passive income and really try to think of myself as a business owner. However, when you're partnered with a large private equity fund and they own a majority of your company, they own you. And it was sort of that Wall Street culture, that just grinding. And I just wasn't fulfilled. So I was making more money than I ever made or ever thought I'd make in my life. Had a lot of management incentives built up. And, but I was in New York and paying a 50% tax rate. And since I owned a piece of the business, my actual K1 from owning the business was more than my salary. So I was basically working for half of what I was making. And it got to the point where it's like, it's not worth working. And I think some business owners may actually start crunching those numbers at some point too, where if you own a business and you're working the business, not running the business, there are some situations where you might be better off hiring another CEO or bringing on a business partner and trying to restructure your life if your goal is to move more into passive income and have more of a, semi-retired passive income lifestyle.
Yeah, you covered a bunch of stuff there. I think going back to your original point about the real estate being, the word real is in it too. It's a real asset. And, there's a time I just had this conversation at a conference this weekend and we're talking about how, real estate, there was a time where people looked at stocks and all the traditional stuff we say is traditional now just because it's marketed by Wall Street. But between 1929 and 1954, the stock market went down 89% and it didn't recover until 1954. But if you count inflation, it took another 5 or 10 years longer than that probably. So there was a time where people say, why would you ever invest in stocks, right? But we're so marketed by these Wall Street firms and they really win at the cost of you. They'll always make money. Even if you're losing half your money, they'll find a way to make money. And so I love that you were able to, figure out some unique niches and be able to take advantage of the opportunities that are there. And I think for all of us, at least a lot of us listening to the Mailbox Money Show, it's all about passive income, right? I had a couple of physicians that made $3 million a year, but they're working 80 plus hours a week. And to me, that's not freedom. Freedom to me, it's freedom of time, freedom to travel, spend time with families, my family to write a book, to do these things as well. What are some of the things that time freedom has given you? What are some things that it's opened up for you?
Yeah, so I love to travel. When I got out of school, it was the .com crisis, and I was just trying to jump right in and make a buck. So I didn't get to backpack Europe or do some of those things. Some people get to do right after college. And, fortunately, I was able to use a lot of business expenses over the years. So I got into the credit card points and miles game, and I love to fly business or first class somewhere new. I've been to Asia multiple times and actually did an executive MBA program. Kellogg Northwestern University has a partnership with Hong Kong University. Oh, and wow. Actually, was back and forth to Hong Kong in 2019 a lot just because I left and I was, still collecting. I was on a non-compete and I still owned a piece of the business. So it was basically, traveling the world, doing executive MBA program, which I never could have done if I, hadn't, learned the points and miles game, in addition to making the big decision to break the golden handcuffs and go on my own. So, there's a lot more places I am, looking to see as well. And fortunately now, I can work from anywhere. It's, going forward, I have a fair amount of passive investments, and the way we've structured our business now too is, I'm in the real estate syndication space, but we're not the direct operator. We're more of an allocator, like a fund to funds model. So the work is up front. The work is vetting the sponsors, getting to know the actual partners that we're gonna, that we're in bed with for the next 5, 10, 20 years. So I still spend a lot of time traveling and vetting, but once we're in the properties, it's not like my phone rings at 2 a.m. when there's a plumbing leak. So it gives me a lot more flexibility to do this travel.
Yeah, absolutely. No, that's the amazing part of passive investing. I'm a big points person too. I think I've got 1.2 million points, and I've, just booked a trip to New Zealand for later this year. So I love traveling and being able to do it. And it's just, there's so many opportunities through the credit cards and things to do it. And there's courses out there and all kinds of things to do it. But so what kind of assets are you primarily into right now? Like, what are some things that you own now? Is it mostly apartment buildings, or what type of, is it commercial?
Yeah. So the core asset class is the value add apartment, the class B multifamily. We try to invest in deals that are above 100 units that are institutional quality, where we're going to force appreciation through renovation. And that's over half of our investments. I do like self-storage, mobile home parks, when we could find good deals. We've done some student housing. Actually did some student housing in kind of end of 2020 where there were some interesting deals where I think people were afraid of just people doing classes online. But we have an operator who is basically in SEC country, areas that didn't fully shut down, that have popular football programs. And, we're in one in Auburn, one in Gainesville, great markets that I think are going to continue to be, high demand for students. A couple of the more interesting things I've done is I've invested in search funds through Kellogg Business School. There's a conference they run in association with Booth. And essentially what they'll do is they'll take like an MBA from Kellogg or Harvard or Stanford, and they'll pay them for 2 years to find an existing business to buy. And they're typically looking for, something that's maybe owned by a baby boomer that's, between 3 and 10 million a year in earnings and EBITDA. And, often there's businesses where, it's a family business, but the children don't want it. And it's not big enough that you could just go to Goldman Sachs and sell it. It's not big enough to get the big private equity firms interested. And, it's a great model. They're buying businesses, between 3 and 5 times earnings, which, compared to the stock market or even compared to a cap rate on real estate is, I think a pretty attractive model. And then they try to grow the businesses and eventually roll, maybe they'll combine 2 businesses together, but they really just try to, you've got a young, aggressive MBA taking over a business that's often from a, aging, comfortable person that maybe wants, work 20 hours a week and wanted to play golf and not really try to drive profits for the businesses. So it's been a really interesting investment, a little off the beaten path that I haven't heard many people talk about.
Yeah, that's a really cool. I like the idea. I didn't heard that term, search funds, but it makes sense. It's kind of similar to what we do. We have a car wash deal where we're partnered with one of the most highest revenue per store car washes called Tommy's Express, and I've realized this exists in franchises. It's nice because it's kind of packaged as one type of thing, and if you find a really good operator in that space, and like same private equity will pay sometimes 5-10 times earnings for less than 10 of these, but if you have 50 of them, they'll pay 20-30 times earnings. And so that's really interesting. And of course you just get value for putting these together and growing things. And but it's I think that's a really cool. How do people find out about search funds? Is that just kind of through networking and asking or being a part of the alumni network?
Yeah, so I was originally made aware because Kellogg and Booth run a conference called Entrepreneurship Through Acquisition. And it's in October in Chicago. So it's before Chicago gets unbearably cold. Now that I live in Puerto Rico most of the year, I'm a little more sensitive to the cold weather.
Right.
But there's a few other conferences. I think Harvard runs one as well. It all started, there was sort of a project or a white paper that Stanford put out about, this type of model. But it's relatively, I think it's maybe been around 10 or 15 years, but it's certainly not got as much attention as I think it should from the audience. And before I forget, the one last one is I have dabbled in oil and gas. You mentioned doctors earlier. I have, primarily, focus a lot on real estate depreciation, but those that are not real estate professionals that are W-2 earners, oil and gas is still one of the only loopholes where you could offset active income. Mm-hmm. So I don't necessarily need it myself, but I went into some opportunities with some of my friends and clients that needed it just because I wanted to be along for the ride with them and I wanted to test out the operator. And, although I'm certainly I wouldn't consider myself I'm not an official financial advisor by any means, but on the alternative side of things, I look at this as like a mastermind group, and I do like to test things out with my own money, and it's very important to me. So it's very powerful if done right. Certainly risky with oil prices, and I know there was a high profile mishap on a carbon capture deal that hit the press recently too. Which
there was. There's it's interesting too. And this is, I have a book coming out shortly called Fire Yourself, How to Replace Your Working Income with Passive Income in 3 years or less. And the whole point is, how do you vet deals and how do you find deals and how do you, all this stuff. And there's some that you got in because of your networks, through people and that's a lot of the best deals I've had have come through people I've met at events or people I've met through different things. What's a piece of advice you give to retail investors of like, hey, I'm trying to, I live wherever I live, and what do I need to do to get better access to unique deals?
Yeah, so I mean, it starts with listening to podcasts like this, getting on the forums and just starting to digest all the information. Going to there's no substitute for live events as well. Not only will you meet operating partners and sponsors, and you'll see who's speaking, who has booths, who's not that it takes away all the risk, but someone spending 5 or 10 grand for a booth and flew somewhere, it's different than just doing an online webinar, for example.
Right.
So it does, and then you can often meet other investors that are already working with them, and for someone who's just getting started, who's never done an investment outside the stock market, I think just meeting other people that are successfully investing passively and then who are where you want to be in 3 years, there's no substitute for that, because you'll really understand how they made their journey, what mistakes they might have made, and people are very forthcoming. I think once you're in this network, in this industry, those that are drinking the Kool-Aid of alternative investments and passive income are very happy to share successes, failures, challenges, and I think it's therapeutic for both. I love nothing more than giving advice. I've always been an evangelist for real estate and alternative investments, and it's this truly is a team sport. And I think if you're in these networks, you're gonna gain tons of value for it and get you to the point where you should be comfortable investing.
Yeah, a lot of nuggets there, man. You go into live events, networking, getting on the phone with people, listening to podcasts, and then, like I said, I say this too. Had 1,500 one-on-one phone calls with high net worth investors, and one thing that comes up for people that do this, have been doing it a long time, is that relationship with other passive investors. If you have somebody else that's invested in 10, 20, 30 deals, so they're going to have tons of experience. They're going to have their own things they do, and you're going to be able to bounce things off each other. And there's no, you and I are both operators, right? So we have, anybody who's selling anything generally has a bias toward stuff that we like, right? So if people have, relationships with other passive investors, they can really learn from each other and have a great, really get a lot of value from that. What's one thing that you wish you had known sooner, or had done sooner in your investing career?
Oh, that's a great question. I think for me, as being on the deal flow side, was investing in marketing. I remember when I was in my 20s, I probably waited a year to spend $700 on postcards, and right. we made close to 100 grand on our first mailing. And wow. We printed out yellow postcards. We had like a roll of stamps. We did them ourselves or hired an intern to kind of help. And then, fast forward 20 years, for about, 10 years in New York, I really wasn't building my own personal brand. I was really in-house institutional. So when I left and I was really restarting, a business that was, investing and trying and raising capital through our private placements, I was a little slow on the social media thing. I was trying to be this aloof ex-Wall Street family office guy. And at the same time, when you meet me in person, I never shut up about real estate and tax, and everything. So I was kind of not putting my personality back out there. And, 20 years ago, it was postcards. Now it's Facebook, Instagram, going live, doing webinars. So for a while, I was kind of just behind the scenes and just couldn't, just wasn't pulling a trigger on committing to marketing, even though I'd learned the lesson 20 years ago. And it's it's same, but different. It's not postcards. It's just, building my own personal brand and being, putting myself out there. So I was a little slow to do that. And now I love it. I love doing shows like this and, meeting other operators and podcasters. And it's always a fun conversation.
Yeah, it does. When you're first starting, it feels there's a lot of things that came up for me when I started. One is the imposter syndrome. Like, who am I to be out here doing whatever this is or putting myself out there? But it's amazing when you put yourself out there. I mean, it's true. You will have more people that will be critical because people are seeing what you do. But I just realized the critics really don't matter. They really don't count. They're just, a lot of times they're in the cheap seats. They're not really doing anything for themselves. And when you can actually get out there and start doing it. And so I think it's kind of what I hear and you're saying too, is just taking the actions, taking the steps. And I think, as a passive, I remember meeting a guy who lived in the Midwest, and he was trying to buy buildings in his area, but he would never go to conferences. I was like, how are you meeting people? How are you connecting? What's your network? Like, it's amazing what happens. There's always something serendipitous that happens when you get in the room. But what are you excited about right now in the investing world? What are some things that you're seeing that you're excited about, whether in real estate or other types of assets?
So, the last year was kind of a tough year with interest rates, both operationally in some cases, but also just from the fear and, just the narrative was really changing. And I answered so many questions about, someone says, oh, the housing market's going to crash. And, they see something on CNN or CNBC. And it's like, I spent a lot of my time answering objections and just really just trying to educate people on my thesis on what's happening. And I think I'm excited that the rates seem to be towards their peak. I mean, the Fed last week said maybe there's another hike or two later this year, but if you're finding good deals now at these rates, and we are seeing some, then I think the sky's the limit. And so I'm excited to just kind of be over the hump of that, whatever panic, if you will, because I know, not that I don't know that I was panicked, but I sensed a lot of panic from a lot of investors. So I'm excited that we're getting to hopefully a new normal, and there's potentially a lot of upside if rates do come down a point or two, and you have a deal that cash flows now. It's going to be all the better in 3 to 5 years if rates are even a point lower.
Yeah, it's amazing how the rates are, everybody's watching, and of course it's getting more challenging, particularly multifamily in some areas for sure, but we're really seeing it in areas like office and other, retail and certain areas. Industrial is booming, but there are certain areas of commercial that are hurting. But it always leads to opportunity, and always leads to things that can be done. And we've shifted a little bit from, we have 200 million in our in apartments, but we're shifting to go do other alternatives. Doing the ATMs and the car washes and the oil and gas and other things. And we're finding a lot of benefit for folks there. So I think it's great. Well, Jack, I want to really honor you for all the things that you've done. It's amazing. You've tried a lot of different things. You've had success in a lot of different things. There's been aha moments you shared. So really appreciate that about you. How can people get in touch with you if they want to connect with you?
Sure. So our company is JKAM Investments, and the website is JKAM. It's short for JK Asset Management, which was my original firm. So JKAMinvestments.com. And we're on all major social media, both personally and the business. So if you're Facebook, Instagram, we even have a TikTok now, apparently, although I'm not doing any dance videos. Encourage anyone to reach out. Love to strategize. Just love to have those one-on-one conversations and get to know investors and what their goals are. And it's fun for me. So it's always enjoyable.
Awesome, man. Well, I appreciate you taking some time with us today. Hope to see you at an upcoming event. I took a couple notes on some of those, especially the search funds, and look forward to hopefully connecting again in the near future, brother.
I was really enjoyed. Thank you very much.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.